Hello and happy Wednesday. Yes, it's Wednesday again. That's hump day. And that means we're just 2 days away from the weekend. But of course, you know, realtors and loan officers oftentimes work on the weekend. So who really cares after all, right? At any rate, it is time for another Mortgage Market Minute, and hopefully I'm going to keep this a little briefer. I keep saying I'm going to keep it brief, and yet last week's I think was around 8 minutes. So we'll see what we can do this time. So let me get started. The rates today were up a little bit as bonds sold off. The Fannie Mae benchmark bond sold off 21 basis points. That's a decent little sell-off, not huge, but you know, better than the little up days we've had over the last few days. Now, it is very close to the first level of support, just a few basis points away. So if it breaks through that, my chart doesn't even show where the second level of support is, so I'm not sure how far it can fall. But here's a couple things to think about. First of all, the JOLTS report yesterday came in amazing. It came in at the highest level ever. Okay, it came in at, let's see, 7.136 billion. So 7,136,000. That's incredible. Now, normally that would have been the first reading above 7 million, except for, I think it was July's reading that was revised above 7 million. So either way, there's a lot more jobs available than people looking for jobs. So that's fantastic news for the economy that, you know, it just keeps getting better that way. That means there's more job choices for people as well. So today, the bad news, quote unquote, is that housing starts and building permits, both of these economic data pieces came in lower than expected. However, there's always a but. However, in this case, there's a but. The numbers that came in were still really strong. Very good numbers. So, you know, we didn't get any benefit from that. Earnings season started off very good and is kind of expected to be good throughout. So if earnings season is strong and we see a nice little recovery from our correction that we've had in the stock market recently, then money will be flowing into the stock market as it already has been. The stock market's recovered roughly half of that correction already. That's really fast. And, you know, again, with all the big names are going to be announcing earnings next week, you know, Apple and Google and those guys. And, you know, if they bring the market up, Amazon, don't forget them. If they bring the market up, as I think they very well could, then we're going to see, again, that money flowing in as they look at, as investors look at the opportunity as a good buying opportunity for better ROI than they would get in bonds. So another possibility that we're going to see more selling in bonds. I would definitely not float. If you can lock. I've been saying that for weeks. Like I'm a broken record. Good thing I love music, and good thing we have digital now. Although I am an analog fan, so I have a nice little collection of vinyl, and hard to beat. Love them both, as long as it's good music. So anyway, I would say lock. If you can't lock, get to a position where you can lock, which is a nice full loan application, your income and asset documentation in, your loan officers pulled your credit report, you have a property identified, although we have a program that allows us to lock up to a year in advance without a property identified, but we still need all that other stuff in order to be able to lock. So if I can help you in any way, please feel free to contact me at 702-812-1214 or 801-893-1737. But one way or the other, get to where you can lock so you can protect yourself from the downside Hopefully your lender has a float down option just in case rates do improve enough to take advantage of that. That hasn't been the case lately because any improvement we've seen has just been very minuscule. Mostly it's been down. If you can see, I don't know if you can see it, but here's where rates were recently, you know, back on August 23rd, and the price for the Fannie Mae 4.5 benchmark bond back then was 104.02, and today it closed at 102.3. So that's over 3/8 increase to rate. So do what you can as quickly as you can, and let me know how I can help. Call me if you have questions or anything like that. Happy to help. We have zero down payment programs for first-time home buyers, as well as lots, you know, FHA, you know, regular FHA, VA, conventional. We have high LTV jumbo loans, which means you can, you know, get you know, loans up to $2 million for as little as 5% down, loans up to $3 million for as little as 10% down. Just lots of great options for all kinds of borrowers. So happy to help any way I can. Hopefully this is less than 8 minutes. Signing off. Until next time, make today great, and see you next time. Take care.